forms a small real body, it is called a spinning top. When a spinning top forms after a trend, it indicates that the trend is getting weaker, and many spinning tops after another could indicate that the trend is going to change direction. And spinning tops could both come after an uptrend, we'll say, where price have rallied and gone up for a while, or in a downtrend, which is where price have declined and gone down for a while. And the thing to be aware of regarding spinning tops is that it doesn't matter in what color it comes, but mostly it would be in a different color than the current trend. For example, after a rally with green candlesticks, a spinning top would come in red. Doji. A doji is formed when the candlestick opens and closes at the exact same price. Its effect is similar to spinning tops, and it indicates either that the current trend is losing force, example in an uptrend that buyers are diminishing, or that there are as many sellers as buyers. Either way, it isn't a good sign for the current trend, and after a doji, it is likely for the trend to soon reverse direction. For all of you who are thinking that a doji and a spinning top seems very similar, and wonders which are most powerful or most likely to reverse a trend, I could say that it is the doji. But since you shouldn't look at candlesticks by themselves, it is all depending upon what other signs you see. For example, if there would be a trendline break at a spinning top, that spinning top would be more likely to reverse the trend than a doji without a trendline break. Since dojis opens and closes at the same price, they are always a black line and doesn't come in red or green. As a little note, I could add that a doji which forms in an uptrend, called a northern doji, is more likely to reverse a trend than a doji which forms in a downtrend, called a southern doji. And as a final note regarding dojis, I could add something which relates to both dojis and spinning tops. If a doji or a spinning top closes higher up than the preceding candlestick, the next candlestick after the doji or spinning top must close below in order for that the doji or spinning top would reverse the trend. Bearish engulfing pattern. This is when the red real body of the current candlestick wraps around the body of the previous candlestick's green real body. This pattern comes in an uptrend and means that the uptrend will soon go down instead. Bullish engulfing pattern. This is when a green real body wraps around the previous candlestick's red real body. This pattern forms in a downtrend and is likely to reverse the downtrend to an uptrend. Something which could be added to both the bullish engulfing pattern and the bearish engulfing pattern is that they are more likely to reverse the trend the more of the previous candlestick's real bodies they wrap around. Something which could also relate to both patterns is that on intraday diagrams, the patterns mustn't wrap around the preceding candlestick's real body, but it only have to have the same size. We'll say they have the same open and close as the previous candlestick. Dark cloud cover. The red candlestick opens above prior high, but closes well into prior candlestick's green real body, and it reverses an uptrend. Its effects is very similar to a bearish engulfing pattern, and in general, a bearish engulfing pattern is more powerful and more likely to reverse a trend than a dark cloud cover. but as stated before, you must always look at candlesticks together with other indicators. So a dark cloud cover with powerful signals from other indicators is more powerful than only a bearish engulfing pattern. Piercing pattern. The green candlestick opens below prior low but closes well into prior candlestick's red real body, and it reverses a downtrend. It is not as powerful as a bullish engulfing pattern, but you shouldn't look at candles by themselves, but with other indicators as stated before. Bearish harmony. This combination of candlesticks forms in an uptrend, and it means that the trend could soon reverse direction. And the difference between this and a dark cloud cover is that the body of the red candle is smaller and don't closes so much into the preceding green candle, as well as being a weaker pattern than a dark cloud cover. Bullish harmony. This combination of candlesticks forms in a downtrend and indicates that the trend could soon reverse direction. And the difference between this and a piercing pattern is that the body of the green candle is smaller and don't closes so much into the preceding red candle, as well as being a weaker pattern compared to a piercing pattern. Hammer. A hammer is a very effective pattern which comes in a downtrend and is likely to reverse the trend. It is common that the lowest part of a hammer's bottom is used as support, and that the next candlestick which comes after the hammer goes down to or near the hammer's bottom and then reverses its course and begins to go up. Note that two hammers could form after another, and in that case they are even more likely to reverse the trend than just one hammer. Hammers come in both green or red, but it is my experience that green hammers are more powerful and likely to reverse the trend than red hammers. Hanging man. This is the same pattern as a hammer, but when it comes after an uptrend, it is instead called a hanging man. And a hanging man is a very effective pattern to reverse an uptrend. Just wait for the candlestick after the hanging man to close below the hanging man's real body. Then everything would indicate that the trend would reverse direction. Same as with a hammer, a hanging man is more powerful if another hanging man forms beside it. And regarding colors, it is my experience that a red hanging man is more powerful than a green hanging man. Shooting star. It comes in an uptrend and is a sign that the uptrend could soon reverse direction. Note that the upper part of the shooting star's shadow would be used as resistance, so the following candlesticks after the shooting star should have problem reaching above the shooting star's shadow. Morning star. When this combination of candlesticks